Good afternoon. Our panel will discuss the role of market authorities in these fair transitions that mobilizes now a very large and very diverse set of market stakeholders, financing the transition of our economies to a more environmentally and people-friendly development model has become a challenge that needs to be addressed as a matter of urgency, and it should mobilize all our energy. Our energies, it's first and foremost those of companies that must refocus their productive systems. Then there is the energy of investors, institutional and retail, who must be able to consider and prioritize transition criteria in their investment choices. Lastly, there is the energy of the entire financial intermediation ecosystem that must effectively support intermediation between issuers and end investors, taking into account the ESG criteria in a transparent and effective way. And yet, confusion still prevails in these areas. Companies are having difficulty reporting on their strategies and results within a sufficiently standardized framework. Asset managers have a tendency of increasing very rapidly the greening of their management with an increasingly ambitious commercial pitch without being able to rely on a body of minimum standards in order to avoid the distortions of the very notion of sustainability, avoiding the kind of greenwashing that would be disastrous in every respect. And retail investors are lacking in precise knowledge of the content of sustainable investments. They have very limited trust in the actual impact of these investments and in the relevance of the labels that are currently available. In a financial Europe based on the freedom to provide services, it is clear that labels and standards must be established at a minimum at EU level. However, it is also clear that the issue at stake is neither a national nor a regional one, but should be addressed on a consistent manner at international level. Some of you could have highlighted that market authorities were late to tackle these issues. I do think that this is over, and that market authorities are now at the forefront to ensure the effective mobilization of the financial sector in the fight against climate change. And we will try to convince you with our 5 panelists, who I think present a fair spectrum of the authorities engaged in this domain. First, a European co-legislator, may I say that? Coming from the EU Commission, with Martin Spolk. Martin is the head of the Sustainable Finance and FinTech Unit in the European Commission's Directorate General for Financial Services and Capital Markets Union. I always mention the full name of this DG because one of the main legitimacy of an European financial services regulation is precisely to implement a fully fledged capital markets union. And it is especially true for sustainable finance, where the EU Commission has a very ambitious agenda. Second, EU Market Authority with Stephen Major. Stephen has been the chair of the European Security and Market Authority, ESMA, since 2011, actually since the establishment of this European Supervisory Authority. ESMA has a key role in the elaboration with the Commission of EU Level 2 regulation and is in charge of Level 3 regulation in order to foster supervisory convergence between EU national authorities. Starting last year, ESMA increased dramatically its involvement in sustainable finance issues. Third, an EU national regulator, but here today more as a possible international standard setter. Eric Then Erik is Director General of Finance Inspektionen, the Swedish authority in charge of supervising the whole financial sector, bank, insurance companies, and securities market. He is a prominent member of many regional and international fora, but one of them is most relevant for our roundtable today. That's its chairmanship of the Sustainable Finance Network launched last year at IOSCO. IOSCO is the international body that brings together all the world's securities regulators. IOSCO is a global standard setter in the securities sector. And first, since the challenges facing the economies are different depending inter alia on the level of developments, a leading regulator from an emerging economy, Neda Ayat. Neda is the president of the Capital Market Authority of Morocco. On top of being very proactive in order to develop sustainable finance in Morocco, Neda has been instrumental for the conclusion during the COP22 of the so-called Marrakesh Pledge for fostering green capital market in Africa, a dynamic coalition of capital markets regulators, and exchanges covering 26 today African countries, and under your leading impetus. Let me just mention that the recent workshop you organized earlier this month with the Toronto Centre on the concrete implementation of green capital markets in Rabat. And finally, Daniel Clear. Daniel is the Global Head of Sustainable Finance at HSBC, but he is here today as the current chair of the Sustainable Finance Working Group of the Institute of International Finance, IAF, created this working group in December 2018. Working group covers a broad range of themes, such as the engagement with regulators, the possible standards for non-financial disclosures, or for defining sustainable finance. Let us just start with a brief presentation on how each of you is approaching the topic of climate finance. And in a second step, we will try to identify the short-term priorities to push the sustainable finance agenda, and we will conclude the third row on the international dimension of the climate finance agenda. So let us start with this brief presentation from each of you in how you approach this topic of climate finance. And we could perhaps start with Martin, who will briefly present the process at the EU's Action Plan for Sustainable Finance. Martin?
Thank you very much, Robert. Good afternoon to all. I will not only explain the process, but also content, because there is a lot of content about what we do. First of all, the European Commission's role is not only to make legislative proposals and not only to regulate, but in the first place to be clear about the vision and about the strategy, what we are trying to achieve. And as you know, the European Commission made a very clear target, which is to achieve climate neutrality by 2050. And the European Commission is also responsible for many other policies that will make us there. The role of financial services and the financial sector is enshrined in this ambitious action plan on financing sustainable growth that the European Commission adopted last year in March. And we identified three big objectives with this strategy. The first one, shift the trillions, reorient capital flows to more sustainable investment. The second objective was to make sure that the financial sector is resilient to the risks stemming from climate change and environmental degradation. And finally, bring transparency and promote long-termism. Since the adoption of this action plan, a lot of things happened. I mean, we already negotiated 2 legislative proposals. The last one is being negotiated just now. We hope to have a political agreement on the last piece, which is really the heart of our strategy, which is the taxonomy, before the end of the year. We have worked very closely with the financial sector and the corporates on putting together the first blueprint of the climate mitigation, climate adaptation taxonomy, the standard for the EU Green Bond. We have developed the 2 climate benchmarks, We are working now on also on the standards for corporate disclosures in the area of climate. We have updated the guidelines of the non-financial reporting directive. So as you see, I mean, we have been very busy, but not only us. We are very happy to see that also through this action plan, we have triggered a lot of debate, and not only among the financial sector, not only among the corporate sector participants, but also among the supervisors and among supervisors and regulators at the international level. We also set up the International Platform on Sustainable Finance, which is now supposed to be a forum for discussing what should be done at the global level, because, of course, that's great that we achieve climate neutrality in the European Union by 2050, but we will address only 9% of global emissions. So we do need to talk also with our international partners how to achieve this goal global. I don't want to be too long. I just only want to say that you have seen now that over these 18 months, the niche of sustainable finance that used to be a niche maybe 3 years ago has become really the center of gravity for our policies now, not only in the financial services, but sustainability has been really mainstreamed in all key policies of the European Commission. And there is no surprise, I mean, the new Green Deal, that will be the top priority of the coming Commission that will come into power on Monday, and the financing of this new Green Deal will be an essential element. And there you can expect that we will shift the ambition and shift the gear into a much higher pace, and we will need you for that. So I will stop here, Robert. I mean, also to give the space to the other participants.
Jean-Louis Barcel in the former roundtable mentioned the idea that there was also an urgent need for a taxonomy for the social dimension. On top of there were two legs, one being the taxonomy on environmental, and the other for social. On this one, social, is it something, social taxonomy, is it something which is in your radar?
Well, the whole action plan on sustainable finance covers all three aspects of sustainability, which is environmental, social, and governance. So the action plan covers all three. At the same time, we have to be realistic and pragmatic. For that reason, we have prioritized the climate and the environmental objectives, at least when it comes to the development of taxonomy. And we are now, again, over this 18 months, we have prepared the first blueprint. I mean, thanks to the group of the technical expert group on sustainable finance, we have a first blueprint on the climate mitigation and climate adaptation taxonomy, but it has taken 18 months. We still need a lot of work and a lot of time for developing taxonomies for the other 4 environmental objectives, which is circular economy, biodiversity, waste, water. And we need to do that. So yes, we do want to also cover social issues under taxonomy, but we have to do it in sequence. We have to be clear about what comes first. And we are not saying that social aspects do not matter. I mean, under the new Green Deal, you will see a lot of emphasis on the just transition and on making sure that the transition is also socially acceptable. But this doesn't mean that we need only taxonomy for that. I mean, there are other tools that we can use and we can develop together with the financial sector that would help the transition towards sustainable green future. So again, the standards for the SRI, and there are many other actions we have legislated on the disclosure by investors that also have to explain how they incorporate social aspects in the way how they make investment decisions. So there are many aspects that we can cover social issues, but the taxonomy on social will have to wait a little bit.
Stephen, at the ESMA.
Thank you very much for inviting me to speak here today. As already introduced by Robert, the topic of sustainability has really impacted the agenda of ESMA. It's really important in terms of our work program. If it's important for an authority like ESMA, it's not only about our objectives, it is also about the fact that we have changed some governance here and that we have a specific network working on sustainability issues. It is also about collecting data. And the question is, of course, why is it so important for securities regulators to work on the topic of sustainability? And I think, although the topic itself is very new to some extent, it fits very logically and naturally into the agenda of securities regulators. And the reasons being twofold. First of all, we know that sustainability is affecting financial products? Is that it's affecting issuers? Is that it affecting their performance? And so from a very classical standpoint, it is important, for example, when there would be a company, energy company with stranded assets, the value of these stranded assets will be affected by the environment, and so that needs to be taken into account. And to some extent, that is a very classical role for securities regulators. The other reason why this should be in the midst of our agenda is that we're seeing is that a bigger and bigger share of the investor community wants to invest in products, wants to invest in companies that meet certain sustainability criteria. And this is around investors that may be even willing to forgo some return or even incur a bit of a higher risk because they want to be sure that their investment meets certain sustainability criteria. And so these are two very important reasons why this is high on our agenda. And obviously that is also very much around disclosure, making sure that on the one hand, these risks on sustainability are properly disclosed by issuers, are properly available to clients that ultimately buy a product. But also in the other direction is that if you buy a product or invest in a company, is that you can see what the impact is on the environment. So important for us to work on that, and we have already done quite some work. We have done work, for example, on how should these risks be taken into account by investment firms, how should this be taken into account by investment funds, and so we've given advice on these points to the European Commission. And we're also working now, obviously, on the disclosure, which is also very important. The disclosure items, which should, for example, be on the website of a fund product or a fund offering, that you can get this information on the sustainability impact. I think there was a very important remark was made by the chairman of the French Banking Association, and he made a point around the timing issue and making sure that we get the timing right. And he emphasized very much because of the acceptability of these measures, let's say from a societal perspective. What is also equally important is to understand how complex it is to get to the right disclosures, to get to the right measurements. It will be a major task for regulators, for companies to collect reliable information on their sustainability impact, and that is really a big intellectual challenge. And that, of course, relates also to the risks of greenwashing. If we don't get the disclosures right, if we don't get the measurements right, ultimately, we might disappoint people, we might disappoint investors because they thought they were investing in a product that was green, but in reality, it didn't properly measure that impact. And so the risk of greenwashing is a real risk. We're all very supportive of this area, but we should also realize that for some in the markets, this is a profit opportunity, and there clearly is the responsibility for us as securities regulators to make sure that there's going to be reliable information, is that there's the information that is going to be reported, is that there's certain assurance, attestation, auditing of this information to make sure that the transition is done in a proper way.
Thank you, Stephen. These responsibilities are now, most of them, on the shoulders of national authorities. So, Eric, Sweden, how do you address them?
So I could thank you for having me here, and thank you for being in this panel. I think I could start with saying a few words on the kind of how we approach sustainability from a Swedish perspective, and then turn a little bit to the IOSCO kind of global level. I think generally speaking, we need to realize, all of us, and I guess in this panel that are on the regulatory side, that we were lagging. We were lagging substantially from the private sector. The private sector actually took a lead here. I think many of us were reluctant to see the link between sustainable finance and the missions of regulators. But I think, as Stephen explained, it's about risk management. It's about disclosure. Disclosure is in the end about pricing investments in the right way. So if we have, for example, disclosure of the carbon pricing, the internal carbon pricing at a firm level, we could better price the bonds or the equity from that firm. So disclosure is a lot about orderly markets and pricing, and of course consumer protection, where the enormous amount of mutual funds and other consumer instruments that went into the market saying they were green without knowing, and impossible actually for private individuals to see whether they were green or not. So I think more and more we have realized as a regulator, and also more internationally, that this is a core of what we should do, because it's about risk, it's about disclosure and orderly markets, and it's about consumer protection. What we do, try to do, is actually to take sustainability as an integrated part of supervision and regulation. So it should not be an add-on, it should be inside in. This is, of course, not always easy, but I think that's the right way to do it. So it's not becomes something for a sustainability person within our organization, or for that matter, at the sustainable person at the institutional level, but rather something that should be incorporated into the supervision. Again, this is not easy because it's a learning curve. A few words on the international level. I think if we were lagging on the national level, we were definitely lagging on the international level. So at the IOSCO level, which is kind of the Basel Committee for Securities Regulators, there was, I think, a little bit of feeling that this is kind of semi-political. So as an international organization, it should not be political. So it's better to stay away from it. But in the end, there was so much pressure from, again, the private side, and also, I should say, from developing countries. There were more push from developing countries that actually we should have some agenda also on the global level. And eventually we took the initiative to have this sustainable finance network to exchange views and to gather information on the role of the regulator, which is actually very different in different jurisdictions. And also to try to find out all the different standards that are out there. And I think we'll come back to this later on, but this is one of the clear conclusions from the survey and the research we made, is that there's so many different standards when it comes to disclosure, so it's actually makes it extremely difficult to judge one company's kind of exposure, let's say, for CO2 compared to another company. So I think that's definitely a lessons learned, and also it differs a lot on a global level. And again, that is an important aspect of IOSCO. And maybe as a last reflection, even if there is standards, even if there is some kind of disclosure, the TCFD or the SASB or the PRI or whatever it is, it's still not validated, it's not audited. So, which is of course the natural thing you do with financial numbers, but this is not the case when it comes to, typically not the case when it comes to non-financial reporting and sustainability disclosure, which I think is an important step going forward to actually get reliable data. So, but I could talk more about the international level in the coming round here.
Thank you, Eric. Eric mentioned the push at IOSCO coming from emerging market authorities. Neza, you have been at the forefront for that. Could you perhaps present your views?
Okay. Thank you, Robert. Yes, in fact, I first need to remind that I'm coming from a country that has been committed since a few decades to promote sustainable development. It is even sustainable development has been included as a core mission of the state in the amended constitution in 2011. Morocco is also one of the first countries to commit with targets, precise targets. For instance, we're committing in producing 42% of the energy consumed coming from renewable energy by 2020, and 52% by 2030. So the environment, sustainable development is important and is core, which made it easier for us to be included in this issue. The second fact I wanted to mention is that we had our starting point as a capital markets regulator was the organization 3 years exactly, I think it's the anniversary date of COP22 in Marrakesh in 2006. And at that time I was very new, very new in this area, heading this authority. But I had understood, as one of my mission was also to promote to develop a regulation that will help promote the capital markets, because in my country, capital markets is financing, but not at the level that is needed. The investment, maybe only 5% of investments are financed through capital markets. So I needed to see how to push this through regulation. And so COP22 in Marrakesh is known as the COP of Africa, as the French Banking Association president stated earlier. Africa needs half of the funds that should come to address the issue of climate finance. So in COP, so it was a COP of Africa, but it was also the COP that would work on how to finance. And this is, so what happened nationally during COP22 is that the whole financial sector, represented by the Ministry of Economy and Finance, 3 regulators, among which Central Bank, of course, the Banking Association, the Insurance Association as the most important investors, stock exchange, so expressed their commitment to finance the greening of the economy through the conclusion of 2 national roadmaps. One for aligning the Moroccan financial sector to sustainable development, and the other one, as Robert mentioned earlier, with a regional scope aiming at fostering the development of sustainable finance in Africa. So within this roadmap, many actions have been taken, among which the Marrakesh Pledge, which I might detail later, maybe in the panel. So in this context, what have we done as Morocco Capital Market Authority, developing market, and with projects that needed financing, and such as the largest solar plant that is in Morocco, Amazon, and so we needed quick wins, and we've chosen a set of diverse tools to promote green finance in capital markets. In these tools, we adopted a progressive approach through soft and then hard regulations, issuing guidelines, but with the support of IFC, and inspired by international standards. The idea is to also to attract not only local investors but also international investors, and taxonomy is an important issue. We focused on stakeholders' engagement and on building consensus. By providing guidelines, we also developed capacity building for all market participants, among which issuers, but also investors. And we are, since we started addressing the issue of green capital markets, we contribute continuously to international standard setting process through experience sharing, leading regional initiatives, and organizing many workshops and conferences. Maybe do you want me to say more? Or
no, you will have the opportunity to say more and to develop these avenues of action for action. But Daniel, there has been many initiatives coming from both NGOs and the industry, and as you mentioned, to some extent, authorities and financial authorities were a bit late. But what triggered the creation of your working group at the IAF?
Yeah, thank you. Thank you for having me. And as you said, we were probably slightly ahead of some of our regulators when we started this. But maybe I give you a bit of context first, I think, where we are and what we're doing at the IAF, and then we can go deeper as we talk about it. First of all, I think 2019 was a year of great progress. I think we sit here at the end of 2019 now, and I think we can look back at a fantastic year of progress. When we look at the market, we hit new record levels every day at the moment. The green bond market is at new records. Assets under management are now at new records. That is, I think, progress. The IAF, we started the working group a year and a half ago, 2 years ago. We are the fastest growing working group at the IAF. We have now member banks from every geography, the Japanese, the Chinese, the Americans, and obviously Europeans as probably the most active. But also, I think, especially over the last 12 months, regulators have come to the table in an incredible fashion. The NGFS, the Network for Greening the Financial System, was created 18 months ago in Amsterdam. Nobody really knew what was going to happen, and it's now a group of more than 50 regulators coming out with recommendations and policies. The European Commission, I think, is driving a global agenda that is being, I think, seen as the next standard of how financial markets will look like. And as we said today, the securities regulators are now very active. And I think what's particularly important that you now suddenly see emerging market regulators really being part of this. The MAS 2 weeks ago in Singapore was one of the first regulators to demand a stress test. So we are debating still here in Europe whether a stress test is the right thing and how to do it. The MAS in Singapore has put it out there. The HKMA in Hong Kong is now very, very active in this. So having said that, while it was a year of great progress, I think we also realize that the gap is still huge. We know that we need to mobilize 6 to 8 trillion of financing every year, and at the best will at the moment, the best numbers that we can find is 1 trillion. So the gap between 1 trillion and 6 to 8 every year is incredible, and the longer we have that gap, the bigger the challenge will be. And we will see next year when we take stock at COP that the gap on our climate commitments is significant. And what I think is more worrying is that the gap between what has to happen in emerging markets and developed markets isn't closing. We know that more than 2/3 of investments have to go into developed markets, in developing markets, and less than 25% is. So while we are all, I think, very proud and very excited here, at the moment we start to create a good, sustainable financial market in the developed world, particularly in Europe, but we don't really see it happening elsewhere. And so I think there are 3 areas of focus for us as an industry, and where we as the IAF are doing a lot of work on. The first is disclosure and data. It sounds very boring, but we know that financial markets are actually quite clever and quite efficient, but they need to be fed with information. TCFD was a great success, I think, in the beginning. We now have 785 companies signed up to TCFD, but the take-up has slowed, and the information that is coming out is terribly inconsistent. So while it's great that we have more disclosure, the information is at the moment not useful for financial markets. The second, I think, is we need innovation at scale in the same way that the green bond market transformed the bond market. I mean, everybody now talks about green bonds. The market was formed about 10 years ago, and it's a great success. But we don't see the same when it comes to sustainable infrastructure, when it comes to the private loan market, There are approaches, but it's very, very slow. And the third bit, which for me is actually the most important one, is we have to move away from talking about green finance to greening finance. And I think that's why the regulators are so important. We need to see this come to the real economy. So while the green finance market at the moment is a great success, it is largely driven by sovereign issuance, by multilateral development banks, by banks. There are very few real economy companies really working at this. And that's why I think the approach that the regulators are now taking, I'm chairing one of the working groups for the Bank of England, how do you integrate climate risk into your day-to-day risk management practices is so important. Let me close just by explaining what we do at the IAF to respond to this. We have 4 big work streams. The first one is on disclosure. We realize as an industry we can only be credible if we create a disclosure standard. Because many, many members of our IAF working group have signed up to TCFD, but the data that we disclose is completely inconsistent. And I share the concern that, that the previous speaker had. We put our information out in the public. We disclose the share of our balance sheet that we think is, at HSBC, that we think is exposed to transition risk. But that information is completely different from any other bank. So it's not useful. So first working group that we have is how do we standardize disclosure in the financial industry? The second one is how do we create better standards in the way we present our products? We realize both in financing and in the investing space, investors and customers are frustrated because every day there's a new product name, a new taxonomy, and you will never create a market that has scale if you don't create standards. So the second one is product taxonomy, product standards. The third working group is around scenario analysis. Everybody talks about scenario analysis at the moment and stress testing, but it's not going to be any use for anyone if everybody is using different scenarios. So what we're trying to do at the IAF is create scenarios that everybody feels comfortable using, that people find useful, because once you have consistent scenarios, the information coming out will be helpful. And our fourth working group is engagement with global regulators, because we realize this will only get the speed that we need if we have consistency across different regulatory bodies. At the moment, we have great engagement, but everybody is doing it slightly differently. And I think if we want to hit 2020 as a super year on climate change, we need a lot more consistency. Thank you, Robert.
No, thank you. Let's move in following what you have just said to our short-term priorities. What could be, what should be, what could be delivered, let's say, during the next 12 months. Our finance minister, Bruno Le Maire, has just advocated for accelerating the pace in favor of green financing. I quote him, "We are in the process of losing the carbon dioxide battle, and we need to win it." He mentioned the need for common definition of green financial products and for compulsory environmental reporting standards. Some also mention the reviewing a carbon pricing scheme. So from your point of view, what security, financial regulator, what should we deliver in the next 12 months?
So as you say, 12 months I think is key. 2020 is a super year on climate change. Green finance will be a big part of COP next year. I think 12 months is the right ambition. I have 4 things. First, disclosure standards, consistency, and it's not just in the financial industry. We need companies to disclose proper information for the financial industry to make the right analysis.
You are expecting disclosure standards coming from the public authorities, not just coming from the market itself? And
yeah, I think it has to go beyond what financial regulators and the financial industry can do, and that means it needs to have government engagement. We can create our own disclosure standards, that's wonderful, but if the information that we receive from the companies that we invest in is going to be very difficult. The second, I think we need to create a common language, common standards. The work that you're doing globally with aligning regulators around the taxonomy, I think is key, because at the moment we don't speak the same language when we say sustainable finance or green finance. Everybody understands something slightly differently. The third for me is the work that financial regulators are doing about integration of climate risk into risk management practices. That is key, and I think next year will be important to land this. The Bank of England, the Banque de France are probably the front runners in this, and exporting this across the NGFS for me is very important. And then the fourth topic for next year in my mind is finally bringing blended finance to scale. So when we talk about making sustainable infrastructure an asset class, especially in emerging markets, we know we need blending, but at the moment we don't have formats that work at scale. It's always bespoke, it's so many different standards. If we really want to move next year into capital flows at scale, we need better standardization on blending.
Could we deliver that?
Well, first of all, I am a little bit scared how aligned we are. I think that you have seen my notes. I also wanted to say, let's move from greening the financial system to financing the green. Yes, that's also, by the way, the motto of the new green finance strategy. So, yes, I mean, I do confirm that the new green finance strategy will certainly include stuff like corporate disclosure. Vice President Dombrovskis announced yesterday in Luxembourg, where I also was, the intention to review the non-financial reporting directive. That will be very essential for the financial sector, also to have the appropriate data, because currently we have updated the guidelines on climate relevant information, so big listed companies are encouraged to provide relevant information, but they are encouraged. It's voluntary. So it will be on the table next year on the Commission. I cannot commit the next Commission that will come into power next Monday, but the Vice President said very clearly, yes, we will revise this directive. And we can also debate whether this should remain, by the way, a directive. Second point, I want to mention that you asked the Commission to give a vision about where we are heading, be clear about the goals, be clear about the targets, give us the tools and frameworks, and I think that we have given it to you. So I would also like to play the ball to you now. You can already start using taxonomy, you can already start using the green bond, you can already start using the climate benchmarks. There are already some very encouraging examples that we have seen. I mean, I'm still the chair of the technical expert group. At the last meeting, we had several presentations of clear uses of the tools that the tech has developed. So there is nothing in the regulatory framework that prevents you from making a difference on the ground already today. Yes, indeed. I mean, the Commission will enshrine the work of tech into regulatory standards next year. I hope that this will be the deliverable of the European Commission next year. We will deliver the taxonomy.
You have already delivered?
No, not at all. I mean, I fully agree we should not be complacent. I just only would like to say that what we have been asked to do in the first stage, I think that we have done, and that doesn't say that we would stop. But now the ball is also with the financial sector and the corporate sector as well. I mean, the taxonomy can be a useful tool for the corporate sector as well. It can facilitate a dialogue between the corporates, even those that are currently polluting, on their transition path with the financial sector. So it's a voluntary tool. I mean, in a way, the only case where we regulated was on the disclosure. But we have never imposed the taxonomy on anybody. So it's really in the hands of the financial sector and corporates to make a difference. And I would like to emphasize that point. So don't expect only the regulators and the Commission to move a needle here. I mean, we have done already a lot. Now, when it comes to what we could do better, I think that there are three things. The first one is really to focus on creating a genuine foundation of the sustainable finance. We talked about the data, but also the sustainability ratings. We need to look at how the system works there. The second area is to make an impact with our tools. Daniel, you mentioned the blended finance. Yes, we need to really think through now how we can marry better the public investment and public side of supporting in sustainable investment with the private sector. I mean, we have also the Sustainable Europe Investment Plan. We need to do better also under the next Commission how to marry these two together. The third area, and because I also see obviously our supervisors and regulators, we also need to look at the risk. When I talk to the EBA or I mean obviously our ESAs, we don't necessarily understand how big the problem is. What is the scale of the problem? And we need to really understand what the supervisors, what the regulators should do to support the sector to manage the risks. So we should not only forget that this is obviously all about the shifting the trillions and impact and scale up, yes, but the risks are enormous. I mean, in the insurance sector, it's very prominent. I mean, the insurance are obviously exposed on both sides of the balance sheet. In the banks, I mean, you know it very well. So we do need to look at the risk. I'm very happy that you mentioned the Network for Greening the Financial System. There is a very emerging, nice material that we as regulators can look at and see whether anything of that kind should be integrated in the next CRD, CRR review or Solvency II. Because we have already regulated the investors and asset managers, but yes, the banks and insurance companies also have to manage their risks. I will stop here. There is a lot of things that we have to do. Last point that we should do better is the international convergence. And I mentioned that we had this idea of creating this international platform of sustainable finance. Well, that was a big announcement, but the real work has to start. So yes, we have started with the first stage, which is the mapping who is doing what. But the next stage will be to agree where these standards, taxonomies, green bond standards, disclosure requirements should converge. We will maybe not have one perfect taxonomy around the world, but we should seriously discuss how the Chinese taxonomy and the European taxonomy and Canadian taxonomy can converge, so that global investors who would like to make a big difference at the global scale can use this converging standard. So this is where we can do better and we should be doing better.
Stephen, what ESMA will deliver next year on this topic?
But before I get there, maybe one caveat to the previous discussion. And of course, the financial sector and securities regulators, they should be ambitious. There's no doubt about that in this area. But we should realize that ultimately the reason why this is such an important topic is that this concerns assets, impacts which are not properly priced in markets. Why is it that we want to have this non-financial information on the sustainability impact? Because it is not properly priced in the assets. And why are these assets that have this negative effect on the environment, when they are not properly priced, there needs to be a proper taxation. And so I think we also, and this is not in any way to be defensive or to be complacent on what we need to do, but it's also extremely important to also continue to focus on the taxation, subsidies, etc. I'm coming from a country where they have a massive subsidy now on electrical cars, and you can see we're Dutch. We respond to these incentives very massively, and there's no disclosure requirement that can compete with that one. And so,
and changes the speed limit.
Sorry?
Change the speed limit.
Change the speed limit, and there was even a debate whether electrical cars could go faster than the classical cars, and it was seriously debated whether electrical cars could continue with the 130, and well, the traditional gasoline should stop at 100. But I just want to make that point, is that there are limits what the financial sector can do. This is ultimately about improper pricing, externalities in primary markets, and we should also spur our governments to act in that area. The problem, of course, is that are all national issues, typically not European issues, but it doesn't take away that there is really the big impact on getting the system in the right direction. On the shorter, because that is the thing you would like...
Let's just, on these issues, that's why I mentioned earlier this carbon pricing issue, which is the market has also a role to play in that field, not only the public authority, but that could help.
Absolutely. It is ultimately about making, I personally, and it's completely going out of my remit, but I found that, I can fly with an airplane from here to Amsterdam for 50 euros or sometimes even 25 euros. You can be sure that that is a not properly priced ticket and that there are some externalities. And if it would change there, then probably many people would reconsider their spending behavior. And so I don't want to be, again, complacent on what we need to do, but it's an important issue for trying to change the system. Then on the issues that we can do and also that we're doing in the short term, and I already mentioned that briefly in my introductory remark, and so we've already given advice to the Commission on how to change the governance processes in funds and investment firms to properly take sustainability risks into account. We're also doing that now in terms of disclosure regarding financial products, regarding financial players. The point I want to emphasize, and the point was already made by Martin, is that I think there is a gap now at a European level, is that we're not progressing fast enough on the non-financials. Ultimately, this is really about the listed companies, the non-financials that need to disclose what is the impact of their activities on the environment. Currently, the non-financial reporting directive is a voluntary, it's not binding, and so I'm very happy with the indications that have been coming from the European Commission to move in that direction. So in my view, this should be about requirements. To recognize that the private sector has already done a lot, but ultimately, if you really want to go to a one system, a credible system, there needs to be a public standard for that, and I think the non-financial reporting directive could play an important role there. And it's not only about the disclosure requirements, but it also is around at least try to give some assurance and start to give some level of attestation to that information. And it also becomes important, where is that reported in the financial statements? Where is it in the annual financial statements? Is there at least the eye of the auditor to some extent to make sure that there is a certain level of credibility to that information? And so, in addition to the work that we are doing, I really hope that, and there's been the indications, we also need to move on the non-financial companies, that they start to report on those issues. And it's not only a reporting issue, it is also an issue around the quality of information.
What's your target for next year?
Well, thank you for having me last year, because there's a lot of things to comment on. First on the amount of investment that we need, I think the number 6 to 8 trillion was mentioned. You need to link that number to disclosure, because if you have a correct disclosure, have the right pricing of CO2 emissions, that will be an easy task. But if you don't have that, then you need to have this discussion that we had earlier this day, that we are committed that and that much capital to green finance, and we are stopping investing in fossil fuel and so on. But if it's correctly priced, then we all know that we will not have coal in a couple of years' time. We will not have fossil fuels, let's say, in 20 years' time. And if everybody knew that, they will stop investing in it, and they will invest in other things such as green finance. So disclosure is key, not only for its own sake, but it's also key to actually get investments into a low carbon economy. So to me, disclosure is the answer, and there I think the global, again taking my IOSCO hat on me, the global perspective of that is extremely important. So I'm inspired to hear of IAFs work, and I think we should work also together, because I think there need to be a regulator, a industry cooperation here. And again then to have the validation. Well, going a little bit away from my role as a regulator and talking about maybe a sensitive issue, but it's extremely important to get the United States on board. United States is not on board today. They are on the private side, but not so much, to say the least, on the regulatory side and on the policy-making side. They are definitely part of IOSCO and Basel, and I think we need them to take a more active role. I think it's extremely important, and that's nothing that we could change, but I think it's need to be said, because that's still first or the second largest economy of the world. And then a note on the life cycle of disclosure. Somebody told me that it took like 20 years to develop the IFRS, or maybe 30 years or 50 years. Doesn't really matter. It took a long time. We don't have that time when it comes to non-financial disclosure and disclosure of carbon. So we need to work much faster. It's encouraging to see that the IFRS now is actually taking some small initiatives to increase their role in disclosure, but I think, of course, they need to move much faster as well. The whole kind of official world of disclosure, if you like, the IFRS and their lookalikes. Thanks.
Do you think the IFRS will releases the scope of non-financial disclosure?
So I wouldn't be an expert in it, but I hear
don't
is
think
that
they will.
No, but we're saying that they maybe guide the management commentary in the annual reports, that they should have more of non-financial in it. So I'm not sure, but I think it would be extremely welcome if they did, and we need in some way to push them, because they are of course extremely important.
what do you expect to deliver next year in Morocco and in Africa more largely?
Okay. Well, in Morocco, what we've done, as I said, it's a progressive approach. We've issued guidelines on green bonds, then sustainable bonds, but then we focused, because it was important, on ESG reporting, which is key not only for issues, but also to make sure that investors are confident on the investments that they're doing in listed companies, but also in companies that issue bonds. So after a guide on ESG reporting and the creation by the Casablanca Stock Exchange of an ESG index, we then, within our rule book, we made it mandatory to issue an extra financial report annually. And so what we expect, I think it's very important. We encouraged it before, and some of the most important issues were already releasing it publicly, such as banks or multinationals in Morocco, but today it is mandatory. So what we're expecting next year is that this, the first results, and see how this ESG reporting is effectively published by all issuers. All these guidelines that we have published have enabled five issues, but by corporate like Mazen or banks, also is in real estate, in social real estate. But still, we need to raise awareness and to develop more capacity building among all stakeholders, so that they can understand that that all these tools can also finance smaller, medium-sized projects that tackle the climate issues.
You have the support of the World Bank for that?
Yes, the support of the World Bank has been when we issued all our guidelines, because we did it to issue a guideline that will be inspired, will take all the international standards, and on a regional scales, our guidelines have been used by other regulators within the continent. So we make sure that we have a first conversion. We not only have a tool or experience on how to create this market and how to help the first issuer to finance green projects, but it's also a first step to enter, if tomorrow there's one, the international conversions in taxonomy.
You're part of this convergence.
Absolutely.
Good. Daniel, you want?
I just wanted to link the discussion on disclosure with the topic of today on just transition, because I think we need to almost please three different audiences with disclosure. There's a regulator that expects more and more. There are investors, but also I think there is a increasing public demand. And you talked about greenwashing earlier today. I think the focus on companies and investors over the next few years and whether they actually do what they're promising will increase. So I think we need to be quite mindful when we talk about disclosure that we don't create something that is super technical that regulators will love, but the public will just read it and say, oh my gosh, I have no idea what it means. So I think the human language is incredibly important, and we sometimes forget that when we design
you
new...
need to reach the right balance.
Yeah.
Because if you simplify too much,
But it's quite hard, because everybody, I think the three audiences look at this in a very different way, and we need to find a way through this that suits all three.
And on the possible convergence between the EU and the US, meaning that on a private sector, the private sector domain, there is some convergence, but not on the public sector, between public sector authorities. How do you assess the possibility of convergence?
Yeah, I would say at the moment it is very easy to converge on the positive. So I think there's convergence on the importance of green finance and everybody says the right things. It is much harder, even in the private sector, to see convergence on proper disclosure, on proper risk management. So I wouldn't overemphasize that it's the convergence in the private sector, because it is very easy for a chairman to stand up and say, yes, of course, green finance is important, but when it comes to the real application, much, much harder. I think we see the same difficulties that you see on the regulatory front, maybe a little bit less, but you do see Europe being far ahead from Asia and the Americas in this sense.
Martin, the dialogue with the US is something the EU Commission is accustomed. So is there something, a real discussion on these issues with the US?
Of course, I leave the high-level discussions to my bosses, but I just went to the United States 10 days ago, and I can report that there is a huge interest of the private sector in this agenda. I mean, it is. Now, I'm very encouraged to see that there is an emerging discussion also among the supervisors. I mean, New York Fed and also the Fed in San Francisco, they are really discussing seriously also, I mean, what are the risks and how they should be managed. I mean, because there are regions, I mean, in the United States that are badly affected. So I'm encouraged that there is really an emerging wave in the United States at the private sector. And I have to say that, yes, I also had a meeting at the Treasury and with other authorities. And I think it's becoming more interesting. I'm not saying that there is a full backing for everything, but on Eric's point, this international platform on sustainable finance has a door open. I mean, we are very open to anybody who would like to join. This is not a kind of closed club of willing countries. We have made it very clear that whoever is interested, however, the country must be committed. It's just not, I mean, I'm interested to be part of it. There has to be a strong commitment, and if there is also an interest, the international platform is open.
This dialogue is part of your work. This dialogue with the US is part of your work. How do you see it?
I first wanted to react on the issue of the complexity and the level of detail and summary of the information, and then I will reflect on the US issue. So first, I think we need to have both complex information and we need to have summary information. And to some extent, in my view, it's not that much different from financial reporting. Ultimately, you want to have a summary figure like a profit figure, and you want to have an overall number that people can easily understand. This is the sustainability impact. But on the other hand, because it will drive investments, people want to have assurance and understanding how is that built up, what is the composition, what has been the impact in various parts of the world, what has been the impact by the workforce, what has been and their travel behaviors, what has been the impact by their factories, etc. And so I think it's inevitable that this will be a combination of summary numbers, but also detailed accountability on how that is composed. On the US, I don't think I'm the best to predict US politics, but I guess there will be a point in time that this becomes so visible to the voters and to the citizens, and that it will be, at one point in time, it will get high on the agenda. Obviously, that is not to underestimate the sadness that it's not high on the agenda now at government level in the US, but I think people will be confronted. I read a story, for example, that the Republicans in Miami are very much supporting the climate change program. Why? Because they see the problems in their part of the country. And so it is sad that this is the way we need to get there. But I think it will be a matter of time that this will, it's not a reason not to progress. I'm sure that we have seen it also in financial markets, is that if there's a crisis that drives regulation, I'm sure that happens here in the same way. If there's going to be another extreme weather event in some parts of the world, it will bring it high up on the agenda.
No, and I agree. And of course, the international platform is open, but it's also true that the US has not joined. So that's why I was saying that this is important. And US is a large continent, and there's so many different parts. Florida and California was mentioned. So definitely, the US is extremely dynamic. So it's not only let's say one person. So when it comes to the kind of the greenwashing thing, I think it's also important just to realize that banks and mutual fund companies, they are for profit. So we have seen, I think there's a risk of it, you know, funds are more and more going into index funds, very, very low fees, low profitability. Well, they relabel them, make them green, and they can raise the fees. So there is a risk that it's kind of the green is captured by the interest for high profits. And I think that's also a responsibility for the private sector, because if that would be kind of the general perception of, let's say, green mutual funds, then it would be a backlash, and then people will say that the whole thing of green finance is only a fake, and that will not be good. So I think also the private sector has a very, very big responsibility to set standards, to have a name and shame within your group, so that we actually have a solid and a proper definition on what's green. But greenwashing is a major risk, I think.
So greenwashing will be very high on our agenda, and starting now. It has already started. I should say in many countries. In France, for example, we are dedicated to avoid that. I think we are on time. No, am I wrong? It's time to stop. So thank you very much all of you for this exchange.